things that I was just looking at, like right now, and I would say maybe in an infancy stage, this cryptocurrency called Ethereum. Let's say it was selling, back in 2016 at like 98 cents, and as a investment point, and you would have bought, let's say, 10,000 shares. That's a $10,000 investment. Today, you would have been a multimillionaire because, in the past 2 years, selling, at 212 now, instead of 98 cents, it's grown in its value. So in today's age, why would somebody want to go, hey, you know what? I have enough money to buy, or invest. Why should I not go put $212 and buy a share of Apple and then go buy one coin of Ethereum? What's going to guarantee me that, I need something tangible to hold on to? Now, this coin, is it going to be secure? Is it going to keep going up in value? Or am I going to worry about, it tomorrow crashing just like the stock exchange would crash?
Oh, yeah. Answer that question,
These are the things, that wait a minute.
Can I answer that by asking you a question? Why do you think Apple is a better investment?
I'm not saying it's a better investment.
Okay.
I'm saying people thinking, hey, I got a share of Apple.
You're speaking for the general.
I'm paying
general
general
person.
public.
Okay.
I'm buying a share of Apple, and Apple.
Yeah.
Everybody has an iPhone, and they're going into new markets now, like China and India, which are in their infancy stage. So Apple's going to continue to grow.
Yeah. Well, can I just say, so I would put the statement out there that the reason why people are like, oh yeah, why don't I just buy Apple, is because people understand Apple. Mm-hmm. People understand what Apple's about. But in the 1980s, did people understand what Apple was about? That's when you bought Apple and you held on to it until now. And, those are, it's getting into something when you understand it early, but maybe the general public doesn't. And so right now, something like Ethereum, like Tony was saying, is there's amazing things that it could potentially do, but we still don't understand the technology because it's so new, or most people don't understand the technology because it's so new.
What was the guy's name that made it? Vitalik
Buterin.
So he's
a genius.
I know, he's like, what, 19?
Yeah.
Like, it's crazy.
I kind of think he's an alien.
Yeah, he's so skinny.
It's like the first time I saw him, I was like, he's an alien.
The way
he's at least a hybrid or something.
Dang it, I wish I could pull it up. Yeah, tell me about it. He looks crazy, and he's playing World of Warcraft and got mad that they changed how the game was played, so he got into cryptocurrency.
Well, I didn't hear that.
Yeah, it's crazy. Yeah, I'm like, but with Ethereum though, like just with having smart contracts attached to it, and just hit the basis of why he made it in Ether and all this stuff, like the belief of it, you do realize that like a lot of electronics, a lot of things, like even those smart refrigerators that we're talking about are going to run off Ethereum. What's being done when you're talking about something tangible, there's things being made, they're going to run off of blockchain. Yeah. That already should tell you, wait, it's what? It's going to be made off it? Companies, Sony, Samsung, huge big companies are buying and getting into
Walmart
it.
filed the blockchain patents.
They bought the blockchain patents. Like they're everything that we're talking about, the cryptocurrencies, which the blockchain is what they run off of, things are being made from there. So yes, tangible things are out there for it. Yeah. Like there's people are always obsessed with they're always obsessed with privacy, right? There's an actual company that actually makes they make a blockchain, right? And this blockchain is dedicated to your privacy as a person. Now, I know we were talking about how everybody sees this and this and that, but you have to think about it, break it down in terms of the internet, how it is now. When you go out and do anything on the internet, I don't care, you go matchups.com, wherever you go, Sean, I don't know where you go, wherever you go, and you're all there, and you're like, and you're doing little things, or you're making an email, or you're, Facebook, or you did this or that, or little transactions, you're leaving crumbs. You're leaving little cookies, crumbs, things like that. We all know that. But there's an actual blockchain that's dedicated to literally almost having like your own personal black box, that when you're out there, it literally will collect all that information and nobody else gets that, just you. It's crazy. Like, it's like, oh my gosh, even with identity, it's helping with bank transactions. When you're talking about a decentralized world, this is like, blockchain's going to be at the base of all this. Yeah. So it's going to be the most tangible thing I think that you can like actually have out there.
And just for the crypto newbie, there's 2,000 different
types of coins out there. So any of the cryptos can be referred to as coins. So the Bitcoin we already talked about is the original one built on blockchain technology. But then Bitcoin was all open source, so they were able to take, other people are able to take that coding and create their own projects based on it. And so Bitcoin's a currency. It's meant to be a currency. It's also meant to be a banking system built into the same thing. So it's a value that you can transfer between people. But then something like Ethereum, what it's supposed to be is a platform that people can build these amazing projects like you're talking about. And EOS is kind of trying to do something similar, but Ethereum was first. So there's currencies built on the blockchain. There's platforms like Ethereum built on the blockchain. And then there's also utilities built on the blockchain. So coins that are supposed to be usable for like a good or a service, like a way of tokenizing goods into a crypto
kind of like
value.
the decentralized Uber like you talked about. That would be something that would be like a utility built upon Ethereum.
Well, Ethereum too. What is it that he always talks about? DOAs, decentralized, automated, or DA somethings. Decentralized automated companies.
Oh, decentralized autonomous organizations.
Autonomous organizations, bro.
Yeah.
Listen to this.
Yeah.
Do you know what those are? They're.
I'm not super versed on
And this is what I mean. My ignorance on fire. Like I'm just like I hear it once and I'm like, oh my gosh, what? It's where the company runs on itself. Like they built the code in, they built the protocols. Once in a while, someone will check up on it. But as long as there's a set rules and policies, the entire company can run on its own, bro. Like people are getting fired over our elevator, man. Like I'm serious.
You don't need a CEO anymore,
right? It's like it's crazy. Yeah, companies will really run on their own. Like I don't know. It's crazy. I just think that I'm seeing it and I'm like, wait, this is where everything is going. And when we talk about opportunities, it's never an opportunity, if everybody sees it. This is something that everybody, when you talk to the average person, they don't see it. And I'm almost happy about it. Yeah. I was like, good, let me hurry up and get mine and then you guys can see it. But yeah.
It's kind of like, like the game of spades, the idea of spades, if anyone knows how to play it. The key is to say, well, show me how to play spades. No. Like that's the whole point. That the whole point of me telling you is the strategy. So it's kind of, so I look at it that way. But like you're talking about, I'm big on the education piece when it comes to it. And when I think a lot of people, kind of like what Sean was talking about as far as a guarantee, is you're not just like he referenced Apple. I think too many people are the quick twitch, the quick turnaround, the quick flip.
Yeah.
You got to get out of that mindset.
Definitely.
And that's with anything. I don't care whether it's crypto or anything that you're trying to reserve or try to go toward. It's not going to be that fast. I think that trying to make it seem that everyone else has that same idea that it's going to be a quick flip is bad. Or giving in that idea that it's going to be this, okay, get rid of the current currency that we're on right now, this cash monetization, and and you're gonna flip your money like this. I think that's disingenuous. And I think that's where it starts with the education. And I think there's too many people out there that kind of have that mindset. Yeah. And then they have a bad experience and they're like, okay, this doesn't work. And that's with anything. You could do that with stocks. Yeah. And someone says do this in stocks, and then you lost all your money. It's like, oh, stocks doesn't work. Well, no, you have to move around. You're gonna take a loss. You're gonna lose a little bit. You're gonna have bumps and things like that. This is gonna happen.
Well, I think that's an interesting distinction, because like Bitcoin and cryptocurrencies in general, I kind of talk about Bitcoin a little more specifically in this case. You can either think about it as a quick flip or like an investment, or you can think about it as a revolutionary way to store your value. And that is a longer, it's a longer time preference. So do you want something now, or do you know that if you wait for this thing that is superior to become something in the future, that it will be better? So that's exactly what you're saying.
I almost feel like it could be both. Like someone like totally. Sean that I see him do all the time. He'll take stocks and he'll flip them and make like a quick $1,000 in that week or something. It's like, I think someone like him, if he saw cryptocurrency, someone like me, no, I'm not into that. So I'm just gonna invest in what I'm gonna do my research on everything. Oh, okay, new blockchain out for, it's called the Petro. Venezuela's gonna start using it. Shoot, let me it's only a penny now. It's gotta at least get to $1, and I put into it, and I just wait over the next 5 years as the country fixes itself, and then boom, I make money. Versus Sean, someone like you, like, if you look into everything, all the cryptocurrencies out there, you're a day trader, bro. Like, you would literally be like, oh, shoot, let me do this. Let me switch this. Oh, this blockchain is for this. This blockchain's for that. This blockchain's for this. Let me do all this. And you would actually I think you could make a quick flip on it, like someone like you.
I think that right now, a lot of companies, Goldman Sachs, there's a lot of people are putting together funds, and they're getting people money that they have given to them to invest, and they're looking for new investments. And I think that with better understanding of what cryptocurrency is, in what I would say the short and the long term goals will be, will they get regulated? Will they be able to be something that can be exchanged on the stock exchange? As it gets further in. Will the investments that are people making?
Are you talking about R3? This company R3 something. Now they're getting involved. Goldman Sachs put like 15 million into it.
Right.
All the big players have been buying this year.
I don't like that.
All of them.
I'm like, wait, why do they want to get involved?
See, we like it because it means mass adoption.
Yeah, that's true.
Doorways are opening, and for us, it
means we're winning.
We're preaching transition here. Right. It's not about going all in overnight. It's buy a little bit here and there.
But just another thing also to look into, like with these big masses coming in with this big money, and they're buying all this, getting in investing it in crypto, you can also open a door to other things that may go wrong. And one of the things is like, when I buy shares of stock to sell, I buy them at a certain level, and then they, as it gains value, you make money and then you sell it. But then there's other people that will try to make money on devaluing it and buying it at a higher rate, and it's, hey, let's devalue it.
Well, that's day traders, they're
shorting the stock.
And that happens with every asset.
Right. Mm-hmm. So, as we, allow more people, investors, and, more bigger companies to, come in, we also have to look at that too, because, it could be a positive thing, it could be a negative thing. It's really hard to tell, I think, at this time. But as long as it is, we get the word out and we get people to understand it, the more they understand it, the more they see it, it will become almost like second nature.
Would you say, from what he's saying, like them getting into it, it'd be a good thing in a sense that now that they're doing that, it's almost like saying like, okay, it is going somewhere, but could it be bad because now because they want to centralize it, they do. So it's like, could they figure out a way to do that?
That's the amazing thing about Bitcoin is that it doesn't matter if the governments want to get into it and the governments want to control it. It doesn't matter if these corporations want to buy it up and they want to control it. Bitcoin is decentralized. They cannot control the nodes. It's the network, or the nodes are the computers that support that blockchain we're talking about. So they cannot control that. They might be able to affect the price short term, but why would they buy it at $6,000 and then try to tank it after that? They've spent hundreds of millions of dollars buying Bitcoin right now.
And also, Bitcoin's transparent. The transactions are transparent on the blockchain. So, there's people who spend a lot of time looking and seeing these big wallets that are loading a bunch of money, and they say, oh, I bet that's Goldman Sachs, and I bet that's the backed New York Stock Exchange and Microsoft and Starbucks.
BAKKT.
Yeah, so people are looking at these wallets getting loaded with this Bitcoin, and so, it's all open. Anyone can see that going on, and that's kind of one of the cool things. There can't be any dishonesty, really, in the Bitcoin blockchain.
Transparency of the ledger. That's really important.
Yeah.
And also, one side note I wanted to make too was, whether you bought Bitcoin when it was $2,000 or bought it when it was $19,000, if you buy half a Bitcoin, Bitcoin can be divisible into as small as a Satoshi, which is 1/100th million of a Bitcoin. So there's the dollar has 2 decimal points after it, right? So you can do 25 cents. Bitcoin has 8 decimal points. So it can be broken into teeny tiny little amounts. So you could buy that's why you can buy $20 worth of Bitcoin or $20,000 worth of Bitcoin. You're just getting different amounts of Bitcoin and Satoshis in combination. So what I was going to say about that is no matter what, Ryan tells me this all the time, you have to think about Bitcoin not in terms of US dollar value, but in terms of its Bitcoin value. So if you own half a Bitcoin, it's always going to be half a Bitcoin. Whether today that half a Bitcoin is worth $3,000, tomorrow that half a Bitcoin could be worth $10,000. So instead of seeing it as US dollars, seeing it for what it really is, which is a certain amount of a Bitcoin. So it's an interesting shift in perspective.
So with gaining value, so if you buy half a Bitcoin, let's say at 2,000, and then it goes up to 10,000. So your investment at 2,000 is now 8,000 more. So you have gained on your investment. So is the government going to now tax you on that? Because that can be considered capital
It's not
gains.
taxable until you sell it.
Until you sell it.
So but they just said this last year, which it wasn't this way before, that if you sell Bitcoin by trading Bitcoin, like half a Bitcoin for Ethereum, that's a taxable event. So
Wait, that's going to be taxable?
that's taxable now. Yeah. So you go buy. Yeah.
I know, which is kind of unfair because that's not the way it works in stocks.
No.
So it's kind of this weird, unfair double standard
Yeah.
on cryptos.
It's like double dipping. It's like, wait a minute. What?
Yeah. I mean, before it was viewed as a like kind investment, which is, I'm not sure exactly where they use that in other places, but that would mean that it's basically the same thing. You're just trading it for another of the same asset, so you can't be taxed on it. But they took that away. So yeah, they're.
Do you know what justification they had for that?
Because Bitcoin went to 20,000 and they want their cut. I don't think they said that, but that's my guess.
That's
Yeah, they didn't do anything before when it was under $1,400, but
Okay.
everybody wants a piece of that.